Welcome back, everyone, to a Market Close live stream. Well, it looks like the market pulled a little Uno reverse on us. It kind of started during our course member only live stream this morning. We're like, oh, wow, things that were up just ain't up as much as they were. And, well, sometimes that happens. I actually think this is a good thing. It's healthy. In my opinion, look, here's what happened. Between between February 19th and about March 8th, we had pain, straight down, right? Then we had, starting on a Tuesday through a Friday, we had straight up. And it was like 10%. And guess what literally happened right after that? Boom, crash again, right? That was our W-shaped recovery. What would I rather have than a skyrocket of 10%? I would rather have, give me chill, flat to 2% over and over again. Put us back on that W. Let the W be a little slower and more elongated. It's fine with me. It doesn't have to be meteoric. The more meteoric it is, the more risk. Remember, when you see stock prices go up, what's happening? Risk is going up, right? And the faster it goes up, the less support it has, the more likely it is to fall down again. So I actually like that we had a little bit of an Uno reverse in the market because we are still largely green. The S&P 500 is still at record highs. We've got the Dow over 33,000. Looks like the S&P 500 might close somewhere around 4,010. We've got Ideanomics up 7%, not as high as like that 15% we saw this morning, but hey, it's still green. And you know what? It gives us a little bit more time to consider buying into this if we wanted to. Voyager Digital still sitting up about 7%. This stock has not sold off today. This is one of the few that has gone through some roller coasters, but this one's gonna end strong. That's great. We got Clever rebounding off the madness sell-off that happened after earnings. Trimble has consistently been going up about 2 to 3% a day. It's currently up 4% ever since being included in ARK-X, the space fund. It is the biggest holding in that fund, and Kratos Defense has kind of been following that up as well, although it is selling off a little bit here into the close. So what else do we have here? Let's see what's doing well here. We've got leading the rally right now here is, of course, Upstart. It's the craziest trader stock. I cannot hold this as a fundamental unless it's under 100. It's too much for me at 142. ChargePoint being up 11%. Not a surprise that the chargers are rallying. Exciting. Battery rallying as well here. Obviously, a lot of this is infrastructure hype. Glad we bought in on Monday before that hype began. We obviously expected that hype to come. Clever coming back a little bit, which is good. Pinterest, nice. I mean, 77. This morning it was as high as 78. So Pinterest has really held firm going into the close here. NGA also holding firm. NGA is great. NGA is Lion Electric. We talked about this yesterday. What kind of infrastructure stocks do we want to look at? Well, if you're interested in potentially the electrifying of school buses and the electrifying of city buses, NGA might be a contender for you. I do not own any NGA yet. As full transparency, though, I am actively researching them. Qualcomm possibly up on 5G here. Alphabet moving, Netflix moving, Snowflake moving. All these guys up about 3%. Roblox up about 3%, but still stuck at like that 66 level, which is really IPO level. You've got Etsy up 3%, Redfin up 3%, which is great. Churchill Capital's up a nice 3%. Again, that's what I like. I like to see that 3%. When we see that 4 5% over and over again, certainly that 8 to 10%, I get a little bit more nervous that we're getting too stretchy too quickly. I'd rather see sustained, smart, and steady price incline. So that's a good thing for me. We see 1.5% over here at Matterport. We've got 1.7% at NEO. It just looked like Tesla has pulled back. I want to say they're somewhere on flat or slightly negative. XPeng's at 0.6, Enphase at 0.6 on the positive here. Right here with the airlines, they've definitely sold off in the day. XPeng was as high as 5, 6, 7% earlier today. Enphase was up 5%. Square was up somewhere around 5%. A lot of these have kind of sold down to roughly flat levels here. Peloton's roughly flat. We got a 0.25% decline at like a Tattooed Chef. Tesla's down 1%. This could be potentially over anxiety over what are earnings deliveries going to look like. Not earnings. What are deliveries going to look like? Personally, I'm not going to be shocked if Tesla misses deliveries. I made a video about this yesterday, the Tesla deliveries preview, so watch that if you have not seen that yet. But it wouldn't surprise me for Tesla to miss. And I think this is the market really building in that possibility. But I don't think that is going to affect the long run trend of us having this nice, slow and steady recovery that we're expecting, this sort of W-shaped recovery. We'll see. Ubiquiti did not drop lower than 285 today. I was really looking for maybe a heavy buy. I did a tiny nibble yesterday at 300, and I was really looking for a tiny buy. A larger buy under that 275. I didn't get it today, so I'm holding firm on that. We do have Microvision down 16%. Again, unconfirmed as to whether or not those LiDAR chips from Microvision are going to be a part of the Microsoft HoloLens, which is rumored to obviously be the lens that will be used for the military contract that they just earned or achieved. We've got AMC down 9.5%, probably because of the $500 million stock sale announcement, which will help offset debt that the company has. But yeah, usually you see a sell-off. I was expecting to see a 4 to 5% sell-off. The fact that we're getting anything above that, which I did mention this morning, I said anything above that, in my opinion, is a little bit of an oversell. I wouldn't be surprised if AMC recovers after this kind of 9.4% fall here. Now at $9.25, it's obviously still a lot more than where it was before sort of our January momentum trade. So you've really got to ask yourself, do you want to be in AMC at $9.25? To me, it's not a fundamentals buy at $9.25. It's a momentum play at $9.25. I want AMC to go to the moon. Don't get me wrong. I played options on AMC last year, like last March, April, and May, and it was wonderfully profitable because you could play them between $2 and $4. But at $9.25, it's a little rich for me at $9.25. At least for like a long hold. So Voyager is now cracking above 7%, which is exciting. We got Kappa bumping off those lows that we had. I mean, we were getting to $10, still sitting at 12.72 right now. SPAC's not the most sexy right now. They've really had a sort of a bad, they had a bad beatdown, I should say, over the last 5 weeks here. So not a surprise to see Kappa not really running there, although we're also not investing in that one. I think that one really came out with some misleading hype that ARK Invest was investing in it, and they actually were not, but nobody seemed to care about that until they cared. That's the funny thing sometimes. The market's like, oh, yeah, ARK Invest. No, it was investors backed by ARK Invest or advised by ARK Invest investing. ARK Invest wasn't. That's crazy how manipulative the market can be sometimes. All right, let's listen in to see what CNBC in the news is talking about.
Financials are up 16% and tech is up 3.75%. So is it a little bit of mean reversion today and yesterday? Certainly. They came down really far, really fast. You want to have exposure to technology, but you also want to have exposure to some of the parts of the economy that are really going to benefit as we get more and more stimulus into the system and we see a little more inflation, a little higher interest rates. By the way, Caterpillar just, there's a rumor out there that Caterpillar is going to raise pricing across the board. That's also a very powerful theme for the industrial sector and for the cyclical sector. There's been all kinds of supply chain disruptions. And on top of that, you have better demand in these sectors, in my opinion.
Yeah, for consumer stocks as well. Micron shares are rallying today after an earnings beat and a bullish outlook. Let's hit that name with Josh Lipton and some details. Josh.
Micron.
Sarah, Micron beating expectations, really seeing strength across the board here from data center to automotive. Analysts noting that demand is now outpacing supply in the DRAM market. That's driving improving pricing trends, they say. Stock rallying 130% over the past year. Separately,
over the past year. Why do we even compare to over the past year? That should be like outlawed. You should not be allowed to compare returns to 2020 anymore. Like we are in 2021 now. 2020 was such an outlier. People are like, oh, I'm a stock genius because I bought stuff in 2020. Really? Like, that's not going to continue.
In this story, which you're a troublemaker, bro. You started this.
Pot calling the kettle here. Didn't you have the T-Mobile guy on, the CEO?
I
right?
did,
Mr.
Mike Sievert.
Didn't you escalate the feud?
Okay, they're just bickering. I don't know. Kind of annoying. Kind of annoyed by the market today. Let's go see if we can pull up Bloomberg TV and actually get something here. Did listen to Jen Psaki's press conference and bounced around a little bit. I didn't find anything super exciting. Bloomberg TV. It's funny. She gets asked, "Hey, like, is the plan the infrastructure plan going to be bipartisan? Are Republicans going to support you in it? And her answer is, well, we ran a poll and Americans, 2/3 of Americans are in support of the infrastructure plan. It's like, that's not what you were asked, Jen Psaki. That's not what you were asked. You know what you were asked. You dodged what you were asked. It's nuts. Politics is nuts. It's absolutely nuts. All right, so we'll get to Bloomberg TV up here in a moment. In the meantime, we are 8 minutes from the closing bell. Wayfair is holding up nicely, and API is actually, I think, pushing into the close here. Yeah, a little choppy push into the close, but it is pushing into the close. Very nice on API here. Good sort of run from lows of the day on API. We've got certainly, I think, opportunities to still pick up stocks is in certain names, certainly like Tesla and Tesla, Unity, Affirm, C3 AI. You know, these are some pretty inexpensive stocks. I'm not in all of those. Not so excited about Plug Power. Palantir, though, I think at 23 is an opportunity. I think this Tesla drama over Q1 deliveries is so short-sighted and overblown. It's just another opportunity to add to Tesla, but there's no shortage to add to opportunities. no shortage of Tesla buying recommendations.
Underneath the surface, as Romain alluded to, is completely different year to date. So one of the indices that we follow at Citi is basically an index that looks at the S&P 500, all of the stocks in the S&P 500, and it breaks it down according to their exposure to value as a factor. And so what it is it's long the top 50%, short the bottom 50%. That differential, so it's outperformance essentially, and that differential, the performance of that index was the highest it has been on a monthly basis, in excess of about 6.5% since 2009. So there's been a lot of disparity year to date in terms of performance, which I actually think presents some interesting opportunities in this market.
I'm wondering, I'm glad you mentioned opportunities here, because I'm wondering if that disparity is kind of stealthily a good thing for us.
I think it is. So I think there's like two different areas that the market's looking at. So on one hand, it's what you could call the mean reversion trade, which is what I just went through. So if we said 2020 was dominated by tech, by the stay-at-home, work-from-home equities, well, that shifted, right? And it changed, and starting with the elections last year. And so that mean reversion trade, I think what the market is starting to look at is, okay, now we're back to pre-COVID levels in some of these sectors. How much growth do we have from here on out? Or should I actually take my gains in some of these sectors right now? And then on the flip side, with some of these COVID defensives, so some of those sectors like tech, like e-commerce, there is a delineation going on, which is healthy, which is saying, okay, some of those companies, they had a big tailwind from COVID and the work from home, stay at home, but it's not here to stay. That was kind of a one-time exogenous event. But other companies are actually wildly profitable. And if we go back to pre-COVID, go back to December of 2019, even in that higher interest rate environment, they were growing and growing at healthy clips. So it's making some delineation there too, which I think is...
It's a good point, sort of dividing amongst the tech, like what tech is going to be super profitable going forward versus something that just did well because it was part of the stay-at-home play. It's a very good point. Very, very, very good point. Okay, so let's see, 5 minutes to the close. Let's see what else they got to report.
Right to it, our stock of the hour today. I am looking at Taiwan Semiconductor. Take a look at this. You're up more than 5%. This is already the leading manufacturer. They've already said, well, we're going to invest an additional $100 billion with the B in the next 3 years to help grow the capacity. We've talked a lot on this program about the supply and the demand constraints. They already are looking for massive R&D.
Yeah, really quick, Taiwan Semiconductor Manufacturing. This is a company that I've been looking at as well. I haven't pulled the trigger on this one. I started looking at this one really probably maybe a week or so ago. Not very long. I think it's a great company. I don't know. Personally, I sometimes I guess maybe I just personally have trouble getting into the manufacturers that I cannot directly buy from, that are suppliers for others. But I'm trying to get over that because I feel like I have an unfair bias against. But this is one of those that's on my radar.
Week, I could go on. How are you thinking about some of these cross-asset signals and the cues that they are giving you as you look beyond equities?
I think some of these are here to stay, right? So one of the things that's obviously been dominating some of our conversations are the concern around inflation, right? And just looking at rising rates and what does that mean for portfolios. And so ultimately, and this is tricky on a day like this, right? So when the S&P 500 is hitting all-time highs, ultimately, if you're worried about inflation, if you're worried about rising rates, it means that cash is punitive, right? So you're basically, yes, cash has kind of a locked-in max downside risk, but you know you're guaranteed to lose value in an inflationary environment, and duration is punitive. So then thinking through, what does that mean from a portfolio allocation standpoint? It's hard in fixed income, right? It's hard to find value. So trying to find alternative sources of yield is really, really important. Getting some diversity.
Man, these are some big freaking words, okay? Like I'm having a hard time following you. And I understand the words she's saying, but man, tell me which stock you like. just say all in on Tesla. That's what I do. All in on Tesla, everyone. All in on Tesla. I see it's red. I bought Tesla on red. I didn't buy anything today. I've been doing good, okay? I think I'm at 26.9% margin as of yesterday. That might be like 27% now, given that Tesla's like down 1%, but whatever. That's pretty good. We're going in the right direction. So getting back to my 20% target, which will be nice. So we are now 2.5 minutes away from the closing bell here. Upstart, ChargePoint still running. Quantum's running as well. PaySafe running again. You know, they sold off like 10% yesterday though. So really just trying to get back to even with yesterday. Wayfair, Gore, nothing's really changed here. This is all relatively the same. We saw this morning as well. Who remembers this morning live stream where it was like impossible to like even click on the ticker symbols because things were so volatile? It was nuts. It was crazy how volatile things were this morning. I mean, I bet the volume for today is just nuts relative to some of the other days that we've seen. First of the month, the quarter rebalancing is over. It's now April. We're out of the toxic March month. Woo! I mean, this is now 2 Marches in a row that have been real poopy doopy. I'm not going to be happy about next March. I feel like this whole March has just been like, oh my gosh, pour another one, will you? Jeez. Anywho, Macy's, Nordstrom, these guys down 3% all of a sudden. You got the mall retailers down 3%. That's interesting. AMC, not as much down as it was here just a little bit ago, rallying into the close actually off that 9%, almost 10% decline we had earlier. Now down only about 7.8%. Still thought that 9, like I said just 10 minutes ago, that 9 to 10% sell-off seemed a little bit oversold from a momentum perspective. Tesla, waiting for those Tesla delivery numbers. I don't think we have them yet. Let's see. Tesla deliveries. NIO's already reported. We've got no. Wall Street looking for 173,800 through May 31st. Do not yet have the count, though, from Tesla. That'll probably be a short-term catalyst for the stock. I don't think it's a long-term catalyst at all. I mean, personally, like, go ahead and miss. It's fine with me. I'll just go buy it. I expect this first quarter to be crappy and poopy doopy. But watch my video on it. We got the closing bell. I just posted it yesterday.
Our first close ever above 4,000. Energy leads the way as far as sectors. Communication services and technology also each up more than 2%. Only utilities and staples are lower. The NASDAQ also joining in the party in a big way, up 1.75% as technology catches a bid after its first quarter of underperformance. The Russell 2000 index of small caps up 1.5%, Wilfred. There's the close with a record for the S&P.
A very nice record indeed, 4,019. Welcome to the closing bell. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior market commentator. As we just mentioned, a comfortable record close above 4K for the S&P 500. 4,019 spot 81, up 1.2% today. The Dow at a session high itself up around 0.5% or 173 points, and the Nasdaq up a healthy 1.8%. Energy, communication services, information technology, the 3 best performing sectors are all up more than 2%. Only 3 sectors in the red. Consumer staples at the bottom, only down 0.25%. Coming up, Fundstrat's Tom Lee on why April could be a big month for the bulls on Wall Street. Plus, the CEO of Emergent Biosolutions will join us exclusively to discuss the stock's decline following news that a batch of J&J vaccines that use one of Emergent's ingredients failed to meet quality standards. Stephanie Link from Hightower still with us, and Tiffany McGee from Pivotal Advisors joins the conversation as well. Mike, are there things to be worried about out there? I mean, clearly, as a record high arrives, are we as stretched as we were last time?
All right, let's see how things close. I do want to hear this answer really quick here.
I wouldn't say we're terribly stretched right now. I mean, new highs in themselves are actually not bearish, right? Every new high usually has followed one before it. However, I think we're within a few percent, if it happens quickly, of, again, having to ask if the market's come too far, too fast. One thing to keep in mind, the market was up, S&P, up 5.8% in the first quarter. Well, earnings forecasts for the first quarter, consensus-wise for the S&P, was up 6%. So pretty much in lockstep. Earnings forecasts continue to go up. I think most of the things you would look for are locking into place. Eventually, I do think you have this issue where you have relatively fully allocated institutions and retail investors. It's not as if people are really underinvested in this market. So it doesn't take much, perhaps, if we get further push to the upside, where people are going to get a little bit too bullish and maybe the risk appetites are going to run wild again. But I don't really see that.
All right, I'm going to pull back here a little bit. So not seeing widely stretchedness. I think the biggest thing is to just remember, do whatever you can do to make sure you are minimizing your leverage, right? That is the most important thing here, is minimizing your leverage. You don't want to be over that 20% going into a bear market. You don't want to be over 30% in a bear market. So you really want to have the capacity for limiting that as much as possible. And it helps you focus on buying rather than be nervous. Okay, so how did we close? Well, we closed kind of the same way we've been, which is kind of boring. Wayfair did almost hit a record here, I feel like, of 330. No, we've hit higher than that before. Hold on, let's see here. It's very high on Wayfair. Yeah, I can't keep buying Wayfair. It's unfortunate. As much as I like Wayfair, it's just too expensive for me at some of these prices. So let's zoom out here. Let's see. All right, we're on the day chart. So on the day chart, that takes us back to 2019. Here we go. We've hit 349, 369 in one day. So the high was actually 31 points higher than where we sit right now. Wow. Voyager Digital did end up 6%. We've got Clever that ended up 5%. Pinterest up about 5%. C3AI up 4.3%. Upwork barely, Upwork, Upwork up 3.9%. Roblox up 3.8%. NGA up 3.7%. Good sustained gains across a lot of our favorite stocks here. Etsy, Snowflake, Salesforce, all up a good 3%. Microsoft's even up 2.9% on their military deal, or probably more than that. Microsoft's so huge. Churchill ended up only about 2.67% up, so not highs of the days, but also, or highs of the day, but also not lows of the day. Instead, it was really Tesla that got really nervous. Tesla and NIO. NIO gave up a lot of their gains earlier in the day and ended up up 1.77%, down about a quarter here in the after hours. Where is Tesla? Enphase ended up only a third. Tesla ended up, whoa. Oh, there it is. Okay. Yeah, that's what I thought. Tesla ended up down 0.93%. And it's roughly flat in the after hours here. So about, it keeps bouncing around. There it is. About 661, 662, right around there. So slightly under what we had yesterday and way off the 690 highs that we saw earlier in the day. Really just this is where we saw a lot of that Uno reverse, where you even had companies like Apple and Amazon up much higher than where they ended. Not a horrible thing, though. It's a way of de-risking, and it's a way of more comfortable, growth in the market. And we'll see how the beginning of April turns out. But this is not bad news for me. All right, let's listen to CNBC for a moment.
Positions. Are you adding them back on now that we've seen the NASDAQ correction, and especially in the bigger cap growth names, or I don't know, maybe you call them value tech, whatever you call them, the Google, Facebook, Amazons, those names?
Yeah, I mean, I don't own any software companies. I own semi-cap equipment because I do think the end markets are very, very powerful. And we talked about 5G, data center, cloud, AI, and all that. I have two value technology companies, which are quite unpopular. But you know me, Sarah, I do like to be a little bit contrarian. I own IBM. By the way, I think that is a hidden cloud play that is underappreciated. And a recent position is for me was Cisco, as I expect the reopening to lead to better enterprise demand. And the stock is extremely cheap and it gives you a very nice dividend yield. So I own a little bit of the kind of spicy cyclical semi-cap equipment. And then I own some of the value and a very large position that I have been adding to all along the last couple of months actually has been Alphabet, because I do like that company very much. And given the operating leverage that it has, and also a little bit of the component of reopen, but still they're benefiting from stay at home too. So it's a combination. And I think they are doing a great job in terms of cash management and buying back stock. So of the FANGs, that's the one I own. I own Apple and Amazon. I'm just sort of market weight those. I don't want to be underweight them. I just think that
I'll give her that. Look, I'm right there with her on Alphabet. IBM?
Alphabet would be the one that I feel the most conviction for this year.
Steph and Tiffany, thank you both for joining us. Lovely to see you.
Nice.
Thanks, Will. Thanks.
For more on the market outlook for April, let's bring in Fundstrat Global Advisors co-founder and head of research, Tom Lee.
We'll come back to Tom.
Rebounding from a 9-month low. I hear it was one of the worst first quarters since the 80s. This is Bloomberg.
Oh, they're ending. How dare they? Well, we can always go to Larry. Larry, let's hear talk about the V-shaped recovery.
Americans are behind on their rent.
Nope. We're going to talk about taxes, taxation, and border wall. Welcome to Fox Business. Okay, fine. Yes, we're going to Tom.
Right. So in other words, if you look at the 17 VIX day, it is something you haven't seen since COVID. That's a pretty bullish signal, especially for cyclical stocks. We talked about this in our 2021 outlook that when you have a VIX that's been elevated and then it sinks to what you think are normalized levels, 84% of the time, cyclical stocks are what we call epicenter outperform. So to me, that's really giving a very strong green light to be long energy, industrials, consumer discretionary, but in general, and of course, travel related, but really that you got to get out of hyper growth stocks.
So the hyper growth, though, does that include some of the big cap tech or are those also attractive?
To me, the FANG trade can still track the market. So I'm less concerned about someone who wants Microsoft, Apple, Amazon, Netflix. But, when
that's, something that we've talked about on the channel, too. Actually, it's come up in a few interviews that just investing in like the Apple, the Google, and that can be almost a little bit more of like a market insulator in some sense. I mean, think about it. You've got the companies, these companies have not sold off much. Apple, Amazon, Google, yeah, sure, maybe they're down off like 10% off their highs or whatever, 13% in some cases. But these companies have not sold off like the other names, the Teslas, the Neos, the charging companies, the Enphase, the Redfins, and things like that. Oh, is this a spike here on Tesla? Wait, did I just see a spike on Tesla? Wait, hold on. Enphase just spiked 2%. Wait, I thought I just saw Tesla up here. No, it was Enphase. Okay, so we don't have numbers on Tesla. Enphase just jumped. What happened? I don't know. The volume doesn't even show up. This could be a glitch. That's bizarre. We'll look at news here. Here, let me pull up the term really quick. Let's see here. Yeah, I am desperately. Well, not desperately. I'm anxiously, I should say, not desperately at all. I don't really care. Or maybe I do. I don't really care so much about the Tesla numbers, but I'm on standby for those. And it usually, my experience has been that we would expect to see those numbers right after the close on Tesla. But I don't see that coming in just yet. And I've got multiple sources up to look for that possible update. Be nice to see, but we could always go live again when those numbers come out. But for right now, I want to look to see what the top stories are. And especially we want to see what's happening at Enphase. So let's see if we can log in and see. What we have going on. Okay, so pull this up. Let's see if it's even still sustaining. No, I think that was just a glitch. Yeah, it's gone. That is so weird. I think it just totally glitched or something. See, CRISPR's up 2% in the after hours. Why did CRISPR jump? CRISPR and Invitae just jumped in the after hours. They're up about 2%, and they look like they're sustaining. Unlike Enphase. Oh wait, no, Invitae. Now it's over here. It was just up here. Oh, that's bizarre. It's the first few minutes of after hours, but I mean, then again, it's been 11 minutes. What a disaster. Very, very bizarre. All right, we'll get to the bottom of this. Oh, let's listen to this about Coinbase.
On Bitcoin.
Yeah, I think when people go through the S1, they're going to realize Coinbase is probably one of the top 5 most profitable exchanges in the world.
Wow.
They might make more money than even NASDAQ. So
Wow.
what investors have to keep in mind is crypto, which has maybe 2% adoption rate, highly traded and high volume. These are going to be incredible companies. So I think Coinbase is a real hint at how much value is being captured in the crypto ecosystem. And boy, it's going to be a great company, and it's going to be a great, couple decades for them.
Well, we'll continue to talk about it as we await that direct listing, April 14th. Tom Lee, good to have you. Thank you.
Yeah, thanks for having me.
Up next on the show, a rough session.
So Coinbase, April 14th. That should be fun. That'll be a really fun IPO, I think. That's going to be a blast. Let's see here. Dude, I wonder if the S1 is published yet. Let's see here. Oh, I screwed up my Bloomberg connection. That's fine, whatever. Let's go to Coinbase Investor Relations. Investor Relations. What are y'all more excited for? Coinbase or Robinhood? Okay, let's see here. Financials, SEC filing. Is it? Oh yeah, the S1's been out for a while. Oh, okay. Well, now we know. The S1 is out for Coinbase. So we can look at all the financials for Coinbase. Let's just do like a really, really quick rudimentary look here. I just want to get to their income statement really quick. So I'm just going to cheat. Revenue, please. Give me to the chart, please. You don't have to say it 71 times before getting me to where I want to go. Please hurry, Coinbase. I do not have time for this. Do you not know that we are live streaming? There we go. All right. Oh my gosh. Wow. Look at this. This was $482 million in revenue in 2019, up to $1.1 billion in revenue in 2020. Transaction expenses barely moving. Tech expense. Oh my gosh. These guys make money hand over fist. Holy smokes. $322 million of net? Dude, we gotta get into the crypto business. Oh my gosh, these companies print tendies. Net, okay, how many shares do we have? Or how many shares are we expecting to have? 322 mil. That's nuts. 322. Is it going to show me shares out here? Proposed maximum share, blah, blah, blah. Where are shares outstanding? Let's just type in outstanding. Okay, they can make it difficult for us. Stock awards. I just want to know total shares outstanding, please. I guess we could probably just Google this or find this in a different way. Oh, wait. I like to find it in here. Oh, here we go. Shares reserved. We initially reserve 31 million shares of our Class A common stock plus any reserve. So what's the diluted? On the effective date, 21 number of shares. Wow. Okay, if we go with 31 mil, I'm sure there's going to be more. Go with like 35 mil, just for giggles. So somebody else know? Maybe sometimes people know. If we go with, okay, let's say we go with 35 million shares. So, they're going to do a direct listing on April 14th under ticker symbol coin. Okay, so if we go with 35 million shares, which there could be more, so that would change that. And we go back to revenues here. Let's see what the earnings per share might be. Revenue, right. I just spammed this button really quick and get back to that page where wasn't it like $331 million or something insane for 2020? I mean, it was nuts. Net, yeah, 322. So if we do 35, 123, divided by earnings, 322, 317, 123, divided by, that's $9 per share. $9 per share in earnings in 2020. Oh my gosh, what are they gonna list this for? Because this could easily sell for like 100 times earnings, which would be like $900 a share, right? Okay. Somebody says there are way more shares outstanding. That makes a lot more sense. But we have Class A at 32 million. Where did you get? Somebody got 570,000 shares. I mean, it would make a lot more sense. And it's not, no. It's not 570,000 shares. That's way too little. It's way too little. There's going to be millions of shares. So anyway, we gotta figure this out. I'll figure this out later too. Shares outstanding, Coinbase. Now, given that, here we go. There we go. Okay. So this website indicates that there are 186 million shares outstanding. That's much. Okay. That makes more sense. So if we divide this by 186 million, if they're correct, 2, 3, that's $1.73. Okay, this makes sense because see now, if Coinbase were to sell for 100 times earnings, Coinbase will, be on the market for about 173. But I wouldn't be $173 a share. I would not be shocked with this kind of money, this kind of income, and this kind of growth. Man, Coinbase could easily go to 200 to 250 times earnings because people are going to freak out when they see that S1. These crypto companies bank. And guess what that's really good for, folks? Where is it? Voyager Digital, the under the radar one, right? Voyager Digital. Jeez, man, that's going to be really good for Voyager Digital. Wow. Those numbers are so good. I'm going to go through that S1 like crazy. I'm excited about that. That's going to be my homework tonight. Coinbase. Oh, man. That's going to be fun. All right. I'll report back to you when I have that. Let's see what else is going on here. IPO. Someone says IPO 250. IPO. Do you mean $250 per share or is that like your guess, or are you saying 250 times earnings? Oh yeah, with that kind of growth, wouldn't shock me at all to see this market pay those crazy earnings. Or those crazy multiples.
Insufficient data, but guess what? Multiple studies have shown now that after a first dose at 4 weeks, the efficacy is somewhere between 80 and 92%. That number 92, by the way.
All right. COVID border wall taxes. Got it. Next. I will make a Coinbase video. What are they? Emergent biosolutions? Man, I want to hear about inflation and Tesla. Okay, sorry, that's super biased, I know. How Archegos blindsided global banks. Oh yeah. Let's see. That sounds interesting. Let's listen.
Prime broker lever up on the same small number of stocks, and so on and so on and so on. And because the client in this situation demands secrecy, and the prime broker provides opacity, they don't share information with one another, and he was able to do what he was able to do, which is just absolutely stunning. I talked to some of the biggest buy-side accounts in the world this week, and they had never heard of Bill Wang or Archegos Capital Management.
We didn't know how to pronounce the firm's
We'll talk
name.
about the regulatory aspect here, Eric, because I mean, you cover these funds. You know how this industry works here, and we've seen the rise of family offices, particularly in the post-Dodd-Frank world, and this has been a consequence of an.
Wow. Listen to this. So somebody just mentioned, Dan, in the comments. I have not verified this, okay? But what did I say? I said it wouldn't surprise me for Coinbase for people to pay easily 200 times earnings per share, 2020, not 2021 projections, 200 times last year. Hands down, people would pay 200 times earnings for that. Well, Dan here in the chat Let me put them up on the screen here. Dan says, oh, sorry, that's the wrong one. Where's the private market? Here it is. Coinbase is trading at 375 in the private market, which 375 in the private market implies it's selling for somewhere around 217 times 2020 earnings. Folks, if you now project forward 21 earnings, oh my gosh, this thing's going to blow up. I mean, this thing's going to go, you heard it here first. It could just go like $500-$600. It's going to be stupid because people are going to have these crazy estimates. I mean, if you got in this thing pre-market, you're sitting pretty. Like that was the one to buy. But that's like the lottery ticket allocation.
I'm sure. From New York, this is Bloomberg.
Fine. Go to commercial right when I cut back to you. Jerks. I mean, how are they supposed to know? They should just stop going to commercial. It'd be that simple. We don't have commercials on here. Although that's probably stupid, but we don't. Anyway, okay, fine. All of them are on commercial. They're all coordinated. All of the suits are on commercial. This is ridiculous. Oh, that's funny. Sorry. I don't want to say that out loud. Somebody wrote something funny. Okay, so where were we? So in the after hours here, 1% on Shift. CRISPR's up a little bit. Is there news on CRISPR or what? No. All right. You got some volatility there in the after hours. Enphase maybe up 1%. Nothing on Tesla. Somebody posted that we might not hear until 2 days after the quarter close. So we might not hear until probably, maybe by Monday on Tesla or Tesla deliveries. We'll see. Tesla's pretty much flat in the after hours here. So that's it. We're on to a boring 3-day weekend now. Darn. Snooze fast. Boring. I can't pull up the shorts right now because I just don't have anything up right now. Kevin, do you think Coinbase will pull us? He said, no, Coinbase is very, very different from a SPAC. Very, very different. Don't forget your own courses. Oh, yeah. I did update all the little banners and stuff for the courses and all the stuff. So that info is down below, which is kind of cool. Thank you for that. Let's see. What else here? Maybe an epic FOMO mess. Yeah. FOMO fest on Coinbase. I don't need to be a part of that. That's going to be crazy. We'll see, though. We'll see. I just don't like getting into the FOMO mess. Although I'd rather double down on Voyager, like an alternate to Coinbase. Maybe that's a mistake. I don't know. I'll read the S1. I mean, just from that glance we saw, boy, oh boy, they look profitable. Oh my gosh, folks, please, somebody call me and open up a Bitcoin shop with me. Or like, wow, that's freaking nuts. All right, what's this? Breaking news, S&P hits record. Seriously? There's so little news that breaking news is S&P hits record. CNBC here. Boring. All right, I'm done. Folks, I'm bored. Have a great 3-day weekend. Thanks for being here, folks. We'll see you in the next one. Okay, bye.